This is an important direct update for seniors and families across the United States. A new federal investigation is underway right now, and while it may sound distant or technical at first, it has the potential to affect everyday household budgets, monthly expenses, and even how certain benefits and payments are handled moving forward. This investigation is not about panic or sudden cuts, but it is about understanding how decisions made at the federal level can slowly ripple down into things like prices, banking rules, benefit timing, and the overall cost of living. Today, we are going to walk through what this investigation involves, why it matters to older adults, and how it connects to stimulus payments, pensions, Social Security, and other senior-focused benefits, using clear and simple language every step of the way. To understand why this federal investigation matters, it helps to first understand what the Federal Reserve actually does and why its actions affect daily life. The Federal Reserve, often called the Fed, is responsible for managing monetary policy in the United States. That means it oversees interest rates, supervises banks, and works to keep the financial system stable. While the Fed does not directly control prices at the grocery store or gas station, its decisions influence borrowing costs, lending rules, and how money moves through the economy. When the Fed is investigated by other government bodies or oversight committees, it usually means lawmakers are concerned about how certain policies may be affecting regular people, especially those living on fixed incomes. This current investigation focuses on how past and current Fed policies may be contributing to financial strain for households, including seniors. Over the past few years, many older Americans have felt squeezed by rising prices, higher insurance premiums, increased medical costs, and changes in banking practices. Even small shifts in interest rates or regulatory guidance can affect savings accounts, credit availability, and how quickly benefits move through the system. For seniors who rely on Social Security, SSI, SSDI, VA benefits, or pension payments, stability and predictability are extremely important. Any investigation that looks at the financial system through that lens deserves careful attention. One reason this investigation has gained attention is because it overlaps with ongoing discussions about stimulus-style relief and long-term benefit adjustments. While broad stimulus checks like those seen during the pandemic are not currently active, lawmakers continue to debate targeted relief for specific groups, including seniors, low-income households, and people with disabilities. Investigators are examining whether monetary policy decisions made by the Fed have made it harder for Congress to deliver effective relief without fueling inflation. This matters because inflation erodes the purchasing power of fixed monthly checks even when benefit amounts stay the same. For seniors, inflation is not an abstract concept. It shows up at the pharmacy counter, in utility bills, and in rent or property tax increases. When the Fed raises interest rates to fight inflation, it can slow price growth over time, but it can also make borrowing more expensive and reduce economic activity in the short term. That balancing act is one of the key issues under review. Lawmakers want to know whether the timing and scale of rate changes have placed too much burden on those least able to absorb higher costs, including retirees and people living on fixed incomes. Another important angle of the investigation involves banking supervision and consumer protection. The Fed plays a role in overseeing banks and financial institutions, and its guidance influences how banks handle deposits, fees, and account policies. In recent years, many seniors have noticed changes in minimum balance requirements, overdraft policies, and account maintenance fees. While these decisions are made by individual banks, the regulatory environment shapes what banks feel comfortable doing. Investigators are examining whether regulatory gaps or overly flexible guidance may have allowed practices that quietly increase costs for consumers, including older adults. This is especially relevant when it comes to benefit payments. Social Security and other federal benefits are typically deposited directly into bank accounts. Any disruption, delay, or fee-related issue can cause real hardship. The investigation is reviewing whether current banking rules sufficiently protect benefit recipients from unexpected charges or administrative problems. While no immediate changes have been announced, the mere fact that these issues are being examined signals that policymakers are aware of the strain many seniors are under. The investigation also connects to pensions, both public and private. Many retirees depend on pension payments alongside Social Security to cover basic living expenses. Interest rates influence how pension funds invest and manage their assets. When rates rise or fall sharply, pension fund strategies may change, which can affect long-term stability. While most retirees do not see immediate changes in their monthly pension checks, the overall health of pension systems is tied to the broader financial environment shaped by the Fed. Lawmakers want to ensure that monetary policy is not unintentionally increasing risk for retirement systems. It is also important to address concerns about stimulus-style payments and supplemental benefits. Over the past few years, temporary relief programs helped many seniors cover unexpected costs. As those programs ended, some households experienced a sharp drop in monthly income while prices remained high. Investigators are looking at whether the Fed's approach to inflation and economic cooling has made it harder for Congress to justify or design new forms of targeted relief. This does not mean new checks are guaranteed or imminent, but it does mean the conversation is ongoing and informed by real-world impacts. For seniors watching their budgets closely, one of the most practical questions is whether this investigation could lead to direct changes in benefit amounts or payment schedules. At this stage, the answer is that no immediate changes have been announced. Social Security cost of living adjustments are determined by a specific formula tied to inflation data, not directly by Fed decisions. However, the Fed's influence on inflation affects that data indirectly. If policy changes help stabilize prices more effectively, future adjustments may better reflect actual living costs. If not, the gap between expenses and benefits could persist. Another area under review involves access to credit and emergency financial flexibility. While many seniors avoid borrowing, some rely on credit cards or short-term loans to manage unexpected expenses. Higher interest rates increase the cost of carrying balances, which can quickly strain a fixed income. The investigation is examining whether current monetary policy has made consumer credit unnecessarily expensive for responsible borrowers, including older adults with strong payment histories. This is not about encouraging debt, but about recognizing that financial emergencies happen and that access to fair credit matters. Healthcare costs are also part of the broader picture. While the Fed does not set medical prices, economic conditions influence insurance premiums, provider costs, and household budgets. Seniors often face rising out-of-pocket expenses even when they have Medicare or supplemental coverage. Investigators are considering whether economic tightening has indirectly increased healthcare-related financial stress. This is particularly relevant as lawmakers debate future healthcare funding and support programs. Throughout this investigation, one consistent theme is transparency. Lawmakers want clearer explanations of how decisions are made and who bears the cost of those decisions. For seniors, transparency means understanding why prices rise, why bank policies change, and why relief programs come and go. While the investigation itself may take time, it reflects growing awareness that economic policy must be evaluated not just by broad indicators, but by its impact on real people living month to month. At this point, it is important to emphasize that investigations do not automatically lead to negative outcomes. In many cases, they lead to reforms, adjustments, or improved oversight. For older adults, that could mean stronger consumer protections, clearer communication about policy changes, or more thoughtful coordination between monetary policy and benefit programs. The process may be slow, but it signals attention to issues that matter deeply to retirees and those approaching retirement. As we move forward, staying informed without becoming overwhelmed is key. Understanding the connection between federal investigations, economic policy, and personal finances empowers seniors to make calm, informed decisions. This is not about reacting to headlines, but about recognizing patterns and knowing where to focus attention. In the next part, we will continue breaking down how this investigation ties into specific benefit programs, what seniors should realistically watch for, and how to think about monthly budgeting in a changing economic environment. Throughout this process, communication and clarity are essential. Many seniors feel overwhelmed by economic news, especially when it is filled with technical language or conflicting messages. One goal of increased oversight is to encourage clearer explanations of policy decisions and their expected effects. When people understand what is happening and why, they are better able to plan and adapt. This investigation reflects a recognition that trust and transparency are vital components of a healthy financial system. It is also important to note that investigations take time. They involve hearings, reports, and ongoing analysis. There are rarely immediate outcomes, and changes, if they come, are often gradual. For seniors, this means there is no need for sudden action or fear-based decisions. Instead, the focus should be on staying informed, reviewing personal budgets regularly, and being aware of how broader trends might influence expenses over time. As we prepare to move into the final part, the key takeaway so far is that this federal investigation is not just about abstract policy debates. It is about understanding how decisions made at the top affect everyday life for millions of people, especially seniors. By examining the connections between monetary policy, benefits, banking practices, and cost of living, lawmakers aim to create a more balanced and responsive system. In the next part, We will bring everything together with practical guidance on what seniors should realistically expect, how to think about future changes, and why staying informed is one of the most powerful tools available.